Good evening, everyone, and welcome to Session Recap, 15th of May 2017. Today, we will see 5 different setups: Euro dollar, Pound dollar, Australian dollar, Euro yen, and dollar CAD. I hope that you had a successful week, and today it was very, very good. We had Pound dollar, New Zealand, really a great trade, and I hope that you really were not afraid to trade pound New Zealand. It's not for the faint of heart because it's a fast moving pair. It has a big ATR, average true range, and definitely if you get into the trade, that is a perfect example how you can make money by using intraday setups. So I hope that you made money out of it. I personally traded. Of course, I trade what I analyze. So really, it was a great setup. It was Camarilla MACD POC. Yeah, but also, guys, bull wave indeed. I am really modifying bull wave to suit today's trading markets, and soon I will come with an update to Admiral Markets blog about bull waves. You should read about it on this Wednesday. Okay, so before we begin, as always, standard disclaimer explains that CFD and Forex trading are leveraged products and can result in losses that exceed your deposits. And this presentation and video is for informational and educational purposes only. And you can read a full risk disclosure by going to this link. Okay, so this is me. And finally, let's go with rules and setups before I show you previous week results. So rules and setups for our trading session are: give price a breathing room, and you can enter within 15 pips of the predicted level if it's in agreement with your system. We call it POC or buffer zone. Use this scaling in if you wish, but don't forget, guys, you do your own trade and money management. Respect your stop loss always. Add the spread to your stop loss. Even if you trade via ECN, try to add 2 to 5 pips depending on the pair traded. We take only one position per listed pair, so it's either positional or alternative trade, whichever hits first. First touch of the zone is the most profitable. That is why we need to focus on the first touch. Positional trades are called trend trades. Alternative trades are counter trend trades. Breakout trades and scalp trade levels can be traded independently of any position. And depending on time and volatility, we use profit stop after 20 pips, not less. Pay attention to my Twitter updates, also to scalp trades if I give you the setup, and add these levels to your system. Pay attention to trend, so you might find other trend-based entries. We had this rule applied during the previous week. You will see results, and you will see that the trend, when trend is good, you can zoom in and try to scalp something out of the market if you miss the original entry. And the term pips pool, that's the maximum available number of pips you could have got or you could have made on recap entries. So past week results: euro dollar positional trade minus 30 pips, pound dollar alternative trade 120 possible pips, Australian dollar didn't qualify but went as analyzed. I will show you what happened with Australian dollar. Pound yen didn't qualify. Dollar CAD went into possible 120 pip pool. So total pips pool was 210. And for me, the trade of the week was definitely pound dollar. So this was basically, guys, for all of you who are new here, remember that you can enter within 15 pips of the predicted level if it's in agreement with your system. So that is very important for you to know, because sometimes the price will not make it to the exact level but rather it will stop maybe 15, 60 pips from the POC zone and then proceed. So once more, for all of you who are new, for example, guys, if you have 1.1100 as the POC zone, so it can be 1.1115 all the way down to 1.0, okay, 85. So that is 15 pip buffer to the both sides. But the merit, the biggest merit of this is because you actually you keep your stop loss intact. So you keep your stop loss intact. So if our POC is 1100, entry points can happen as soon as the price enter around 1115 till 1085. We need to use that 30 pip buffer zone overall simply because we don't know where the price will stop and reverse. Because of that, we are using technical analysis and we are using so-called buffer zone to predict the possible price movement. Believe me, guys, at least in my opinion, and at least how I teach you to trade, trading price action really with applying good management, money management, is definitely the road to success in trading financial, especially Forex market. So you really need to understand the concept, the principles of zone, price action confluence, and other tools. Simply, in my own opinion, you cannot trade just by looking at charts without any knowledge. You need to apply candlestick knowledge, price patterns, chart patterns, historical versus now moment perspective. I don't know really how you trade. I always see a lot of new people on our webinars, and also I have a lot of new emails from people who traded using other systems and tools. Believe me, guys, there is no big success just by using simple systems that tell you, okay, you can trade when stochastic cross is 5 or 80 or 20 or EMA crosses. I mean, it's good for newbies. You can trade maybe for a few months to see how it goes. But if you want to be really a trader that follows most of price, most of chart patterns, most of pairs that are offered through our brokers platform, you definitely need to know about price action. That is very important. So this is what happened for euro dollar previous week. This vertical line is the exact time of our webinar. So what happened was euro dollar, we had a buy position initiated. Well, actually it went into a loss, hitting our stop loss of around 30 pips because price went a little bit down. It didn't break 0.820, but rather it stopped and reversed slightly above it. That is why I still think that if the price gets below 0.820, we can have some nice breakout trades to the short side. Okay, so that is what we also are paying attention. Pound dollar also, as I say, in uptrend. 28.40 was our buy position. Alternative sell was 29.70. What happened is the price went to our alternative position to the zone and then it dropped, making pound dollar the trade of the week. Really an excellent setup. I'm very pleased how it came to be, and definitely pound dollar is getting back on its track. Successful trades by using pound dollar. Really, I'm very excited to trade pound. Today we had the excellent pound New Zealand setup. So guys, this is pound New Zealand. Today the price went here after I made the analysis. The price went here within the POC zone and then spiked to the upside. Now tell me, guys, I know that a lot of you are trading with different by using different chart patterns, by using different tools. But I personally have developed Camarilla MACD method, and really I'm enjoying in analyzing and trading it. It's not very simple. I know it's a bit subjective, but guys, these zones are very accurate. They're almost perfect in my opinion, because that is what keeps me successful in analyzing and providing you with up-to-date and the latest analysis regarding forex market. Pound New Zealand is a very fast moving pair. ATR for last 14 days is 175. Compared to, let's say, euro dollar, this is triple the ATR. I mean, it's huge ATR. So pound New Zealand even moves a lot more when there is a big and strong trend. So have in mind that some pairs are there for you. I personally like to trade pairs that are fast moving. I'm not afraid of trading pound yen, pound New Zealand, those pairs that are very fast. I am personally bored with trading euro dollar if it moves 20, 30 pips. That is what I really, I'm very bored, and I tend to close my trades even earlier because I like fast moving pairs. I like to be in the active market. And pound New Zealand today, this could have been the trade of the month, because at this point, if you're still in the trade, it's around 80 pips profit. Okay, so watch for that. Watch for that definitely. Okay. Uh, yeah, Carmen is saying she likes the pair as well, right? It's she, I think, Carmen. So yeah, I mean this is a fast-moving pair. We call it the beast, and pound yen we call the dragon. Brian is saying he is 70 pips up. Uh, I already protected my trade, guys. What I did is I scaled out of my position, putting the rest to break even. So I will keep my trade overnight. But my suggestion and advice as a trader to a trader, guys, if you want to protect your trade, the best thing is to exit one part of the trade and put the rest to break even. So you won't be losing anything. Yes, GBP can be moved by May's speech tonight, but that is why I'm saying if you want to protect your trade, that you need to use scaling out. Scale out and put the rest to break even. That is very important. Ro is saying that the sound keeps going off. I don't know. I mean, the sound should be okay, definitely. And yeah, it should definitely be okay. I'm using a professional headset and professional microphone and Lion Mod mic. It's a separate standalone. It's very good. It's not a standard headset, so it should be okay. I mean, the sound can vary, of course, if from the internet connection and so on. Maybe I have some filters. I don't know. I will check it later, but it should be okay, definitely. Australian dollar was in downtrend. We had possible sell position at 74.30, but we also had alternative buy position around 73.00. What happened is the pair pulled back here, you see, but it didn't make towards our POC zone. The POC zone in this case was around 0.7315. Okay, so 0.7315 was POC zone, 7315, 7300, and 7285. That is our POC zone. So 7285, 7300, and 7315. Well, as you can see, our Australian dollar almost made it to the POC zone, but unfortunately, it didn't hit the POC zone. But at least what you could have made is you could have actually followed the trend. So you might be zooming in into lower time frames, trying to find scalping setup or setup that happened at the break of this, let's say, mini Levez pattern. Levez, or low volatility zone, is the zone where that usually happened in the past and where the price tends to make a breakout from. So this was a sort of low volatility zone, and as soon as the price broke through it, it came retesting the zone and came back in a nice swing pattern. So this was also leaned head and shoulders here. So if you watch these lows here, left shoulder, head, right shoulder. So this is lean inverted head and shoulders pattern. And also when this uh, trend line broke, there was a breakout, retest, continuation. So you should have made some nice order to the upside, strictly following the trend. Pound yen didn't make it close to POC zone. It was in uptrend, but definitely it didn't make towards our POC zone. The pullback that I was hoping for didn't happen. What happened was spike upwards and then slow grind towards the POC zone, but it was too late to make an entry and the price went nowhere. So we didn't have any trade on pound yen. And finally, dollar CAD, we had a nice position buy setup around 36, 35. This is where the price came. It was 36.46, so it came within the zone and definitely rejected to the upside. So for all of you who are new here, have in mind that the most profitable setups are always happening when the price makes the first rejection within the zone. That is when we see the most profitable setups. That is why I always say the first rejection is the most profitable. So those were setups for previous week. Now we can move on to setups for this week. I will still be buying euro dollar. For me, dollar is in up, euro dollar is in uptrend. Positional buy could happen around 1.0880, stop loss 1.0825, TP 1.0980, TP2 1.1020. Possible scalps around 0.930, breakout sell 1.0820, stop loss above last 1 hour high, last high, 2% risk. You need to go with 2% risk. If that happens, TPs are 1.0780 and TP2 is 1.0730. So what I think is that that euro dollar uh, could go around 0.880 in a positional trade, and of course 0.930 is a scalp trade. So you should watch for those possible setups. What can happen is that we don't have any pullback. I personally am one of rare analysts and traders that predicted that euro dollar will go up this week, at least according to Forex Street polls. I'm watching usually Forex Street polls to see what people say. But for me, this is clear uptrend. I already talked about it. I mean, the price, I will open the chart now. The price is making higher highs. Also, the price has been making bullish patterns on higher time frames. And if we piggyback momentum from higher to lower time frames, you will see that this is really clear uptrend. So you see, even on 1 hour time frame, it made a rejection here at this spot. 4 hour is very bullish. There is still a retail gap here. This is a runaway gap, so you cannot close it randomly. Here, you should see the picture now. So this is retail gap. you can easily see a retail gap here. You can also put a trend line above the retail gap. This is the range of retail gap at this point. So this is a possible mini channel happening if the price drops below 0.820. This is bullish, guys. I mean, according to my understanding of candlesticks, and believe me, my candlestick knowledge is without any bragging. Of course, it's very huge. I mean, maybe I cannot say very huge, but it's huge. Okay, and today's markets are not the same as they were 15 years ago. In the way how I see markets and how I watch at candlesticks, wicks are more important than bodies. I don't particularly myself. I don't look at those patterns all the time. For me, the best pattern is Marubozu candle, of course, and whatever has the pin in it. These are pin bar rejections. Whenever you see a pin, it means that there is a block of sellers or there is a block of buyers. So if you compare now moment to historical moment, you can see that this zone here is just by using candlesticks, not other confluence. You can see that this short-term history was completed in the now moment when price got into this zone here. So you see these wicks here signify buyers. You don't need really to know a lot about candlesticks, guys. Believe me, if you go with a trend, and if these buyers happen within the POC in now moment, around 80% of chance, or maybe 90% of chance, that you will have a successful entry in the market. And this one of the reasons why I'm still buying the dip. Buying the dip on euro dollar is really this historical versus now moment perspective, while this trend line holds it. And don't forget, this is weekly Camarilla pivot. So weekly in the zone, trend line, double bottom, failed head and shoulders, order block. For me, this is a no-brainer. So at this point, I will still try to buy the dip. I don't know if it will happen. But trading is about patience. Trading is not just watching the chart doing nothing or buying or selling randomly when you see levels of support and resistance. You need to be very patient. You need to wait. As I say, you need to set the trap for a forex price. And when the price gets trapped, that is when you release your traps and capture the pips. So you always need to be a hunter. And you know, the best and most successful hunters are silent hunters. So you need to be patient, wait in the shadows, okay? And then when price gets to you, when market comes to you, bring the trap and trap the price. That is how traders do. That is how we do. So from price perspective, now this is the POC zone, slightly above this low here. But if you make this trend line, you can see that this is a higher low. So if the price gets here and it wants to be an uptrend, it should respect this zone again, going to the upside. For potential scalp trades, for all of you who want to scalp, pay attention to 0930 because we have order block here, we have historical buyers, we have ATR pivot, and it's very close to ATR projection low. So watch for possible rejections around 0930. Now, pound dollar is also in uptrend. Buy position could kick around 28.70, stop loss 28.40. TP 29.65, TP2 30.20, scalp swing possible buy 29.00, stop 28.75, TP 29.60. Alternative sell 30.20, 30.50, stop TP 29.50. For all of you who are new here, I see a lot of people now, and a lot of new people. Again, this is how I do, guys. Always strict entry zones, targets, possible targets. Of course, I always say you need to fish yourself by yourself, so protect your trade once you profit. How you will manage your trade, it depends on you, and definitely you will always see clear setups. Always. Price entries, I'm teaching you how to use price action by giving you best possible setups. So here again, possible buy opportunity 28.70. Here I will now open pound dollar trade. It could be it could enter the zone very soon. I will open 1 hour. I mean, watch this 4-hour time frame. This is so called. Okay, I will chart you something. You can make it like this. It does not need to be perfect. This is just a chart pattern here. But guys, this is called bullish flag. This is a sort of bullish flag. Now, if you even make the flag from this spot, it will be even more perfect. But for me, this is actually where the flag was shaping in, because this is the pole. So if the price breaks above, it has the room to the upside. It can be a huge spike in pound dollar. I don't know if it will happen, but at this point, I will be trying to possibly go long and dip. Just because we have Theresa May speech tonight. Guys, about this setup, be careful. Very careful. If you see a sudden spike in the market, if you see a whipsaw in the market, don't trade it. Or whatever, what you can do is you can lower your risk. You can really lower your risk. Try to get in the market, but go with 0.5% of risk instead of 1 or 1.5%. You always want to be on the safe side of the market. You don't want to be caught in something that you cannot handle. So if you want to trade this, be careful because of Theresa May's. Judging from technical analysis, and you know that sudden announcements and news events can simply mess up with our technical setups, then, from straight from technical point of view, this could be a good longing opportunity. On 1 hour time frame, I will remove. I mean, I can even leave it here. It doesn't hurt. So you can see 28.70 is a possible buying zone. First of all, we had a low here, and if it breaks, it should go to another low here. That is in a nice confluence here. Previous high, so this is order block here. Then we have a little bit lower price making a double bottomish price. So 28.60 to 75, this is where the price could reject. We also have a flag lower trend line that is making an X cross with weekly L3 and daily L3. So this is basically a confluence of historical buyers, order block, weekly L3, daily L3, ATR low overshot. So if the price gets there, it will be oversold, judging from intraday price action. So you want to buy when price is oversold, right? When the price is in uptrend, you want to buy when price is oversold. When price is in downtrend, you want to go short when price is overbought. Don't forget the basic principles of trading financial markets. buying when price is low, selling when price is high. You don't want to be caught into something that you're not that you cannot manage. Okay, next one. So this was pound dollar, and of course, if we see 30-20, then I could probably go into a sell position. Possible scalping setup could kick in soon, but now it's a little bit end of day trading. Market is also waiting for Theresa May's speech. So, well, I would advise maybe better to wait for a POC zone. But as I say, it could also spike from 29.00 28.99. 30-20 is a possible shorting opportunity. It will definitely come within the range of weekly strong resistance, that is weekly H5, that is weekly strong resistance. So if it gets there, well, I think we could go for a short trade. Australian dollar is in downtrend. We can have a sell position around 75.20, stop loss 75.50, TP 74.00. Alternative position could kick in around 73.90, stop 73.40, TP 75.20. Also, there will be some Australian dollar news data soon, so you might be also careful about trading it, but judging from a technical perspective, this is what we might be waiting for. So Australian dollar, 75.20 is a possible sell. I will zoom into 1 hour time frame. So 75.20, a possible sell. This is resistance here, and 75.20 order block. M pattern previous. This is M bearish. So this is the zone. Low volatility here, breakout. Then low volatility, breakout to the upside, head and shoulders downside, EMA 89, capturing it below it. This is mother candle. This is baby candle. Some prefer to call it outside bar. For me, this is simply a bearish sign. So when the price gets here, I will short because we have a lot of confidence. And even if it gets above weekly H5 here, the price will be overbought. This is downtrend, so we are selling when the price is overbought. Where it's always where we have the biggest confluence. And confluence here is what I previously said. And I'm sure that during next couple of days, if the price overshots WH5, this zone will print out some Camarilla levels too. So I'm waiting for this possible short setup. But we might have a buy setup before short setup happens. So possible alternative buy could kick in very soon, 73.90. This is counter trend trade opportunity, 73.90, somewhere around this region. Here you see the zone W. This is bullish pattern. W, if it had a bigger wick here, it would have been called Adam and Adam. But because it doesn't have any double bottomish price, we can call it a lean. I mean, this is lean, the W pattern here. So if the price gets in the zone, this will be the confluence of 1 to 3 point W, EMA 89, ATR low, and possibly some Fibonacci number. I don't know. I will place it here. So yeah, from this spot to this spot, yes, as I was telling you guys, 50% of retracement, almost perfect. So you see, it will probably reject to the upside, going in if it goes into our POC zone. So this is Australian dollar possible setup. Now we have euro yen uptrend, positional buy 120 124.10. Stop loss is 123.50. TP is 125.50. So we are going with rounded numbers, right? Uh, Usually the price, how banks trade and institutions, they like and they prefer those rounded numbers. Why I say rounded with ed pronounced is because I call 0, 0, 50, and 20 round numbers, but we can call it rounded numbers because 0, 0, 50, and 20 are natural levels of support and resistance, and banks like to use natural levels of support and resistance. Why am I saying banks? Because I teach you how to trade professionally like institutions do, not like normal standard retail traders. So always pay attention to those sweet numbers. Those are called rounded numbers, and those are numbers where price tends to react. Banks like it, institutional traders like it, hedge fund traders like it. Why wouldn't you like it? So here, Euro yen 124.10. Why 0.10? This is again confluence. We will put Fibonacci retracement from the double bottom. Always put Fibonacci from the left to the right, from the past to the present. Why? Because it will give you the future outcome. From past to present to have the future outcome. Here you will see that 124.910 is in a perfect confluence again with 50 retracement. It's also very close to 120.3.90. This is the zone where the price could reject. It's also daily H3, so we could see a retest of daily H3, EMA 89, 8-year pivot point, 50 retracement, and don't forget, we have an order block here. This is bullish order block. See, price tends to respect order blocks in the past, and definitely if the price gets there, we might see a spike to the upside. I'm waiting for this. Let's see if it will happen. Nevertheless, it's very clear. 124.10 stop loss, 123.50, 125.50. This is roughly 60 pip stop loss, so don't use more than 1.5% of risk for any stop loss. The key of trading Forex market successfully is having a good money management. Don't forget that good money management is the holy grail in Forex trading. No matter what you know, no matter what you hear, no matter what whoever told you different is wrong. Holy grail exists, and holy grail is money management, correct money management. Dollar CAD is in uptrend. We have positional buy around 36.35, stop loss 35.90, TP 37.90. Alternative sell 38.00, stop loss 38.30, TP 36.70. So this is what we might see. And also, guys, I really advise you to use this mini terminal from Admiral Markets. I prefer really to trade with Admiral simply because of simplicity. I've been trading with Admiral for a long time, really, and the simplicity of using mini terminal along with host of other tools from Supreme Edition is excellent. And I always say when I speak to German guys who actually introduced us to Supreme Edition, I'll always say, great job, guys, because you respect what actually traders want. You always follow what traders want. And this is, I also made some suggestions for Supreme Edition, and I really am very, very fond. My favorite tool is, of course, I'm always having mini terminal, but my favorite tool is definitely correlation matrix. You don't need to go to other websites to use correlation matrix. Very, very, very useful tool. And you can always watch for different price correlations. Extremely useful for all of you who want to trade with the multiple pairs. And I encourage you to trade with multiple pairs. So guys, have in mind that dollar CAD, now we are moving to dollar CAD. Dollar CAD is in the POC zone at this point. Okay, yes, it's within the POC zone. So be careful. Yes, here, guys, you see, it already triggered when the price was a little bit lower. But yet again, it's dollar CAD has been triggered, and let's see. Definitely here you can this was rectangle consolidation. Okay, now see, I need to move to my other screen if this screen has frozen, but let's wait, maybe just a temporary glitch. Okay, here, yeah, it seems, yeah, I'm running multiple charts, a lot of things going on, so it might slow down from time to time, but it's usually instant. Here you see it's in uptrend. Then we had this consolidation phase. So this might be a fake out because the price is in the POC zone at this moment. And also it already, now I will show you, it already is touching. Yes, you see, this is weekly, daily, and this is now L5, daily L5. So if the price keeps going up, going up before it drops below daily L5, we should be careful. But if it closes below daily L5, the chance is that our trade will go in a loss. So that is why the stop loss for this buy position is 35.90. 10 pips below daily L5. Okay. So trying to keep it safe, play it safe. Let's see. It's in the zone, so the trade might develop during maybe next couple of hours or eventually tomorrow. Now I will roll the slides again, so you actually can ask me if you want to know anything, and if you want to have some other fast info about different pairs. So euro dollar, the first one, pound dollar, Australian dollar, euro yen, and dollar CAD. Now let's go to your questions. And is asking, why does no one uses MT5? Oh, well, MT5 is not, it simply does not have full-fledged support as MT4. I mean, at least for indicators, people are still using MT4 more than MT5. It's an old habit. Also, MT4 has been updated. You know, when you have a support for something that works, you usually don't switch to something even if it's better. So yes, on MT5 there is also FIFO rule, first in, first out rule. So again, you know, guys, a lot of things going on. Yes, Hazelhoff, you're right. It has a FIFO rule. So I personally will stick to MT4 as long as it's supported fully. Uh, Next question was and comment was from Martin. Pound New Zealand and 15-minute full wave experience. Nenad, thank you for your continuing great insights and teachings. I began a bit of reading and studying on Bill Wolf discoveries. Of course, have in mind that Bill Wolf discovered wool waves, but you need to adapt wool waves to present market conditions. It's the same as with Steve Nissen. Steve developed, he didn't develop, but he brought Japanese candlesticks to Western world, but also you need to adapt it to present market conditions. You cannot claim, basically for wool waves, you cannot claim that wool waves are the same for using stock charts, forex charts, equities. They're different. And with forex market, they they other logic applies than with trading stock market. So I adapted how I teach people to trade wool waves. I adapted it to a different perspective than it was originally introduced by Bill Wolf. I mean, as a trader, I have the right to do whatever I want to as long as I make money. So that is my right. So I use, of course, the basic and the core principles, but I also have my own rules that I've been testing and how I use in present market conditions. Yes, there is a lot of indicators, but as I say, I also try to use Fibonacci extension tools and breakouts of 1 to 3 trend lines that are not in the original concept of bull waves. Okay, now the question was about the dollar yen. Is it still in uptrend? If you followed my price analysis on dollar yen on Friday, you know that I went long. I closed my trade. I mean, I didn't close my trade, but I was profit stopped for some 30 pips because when price broke through daily H3, I had a long trade. I put my stop around 113.68, 69. It hit my stop. So I actually was stopped out for something like 30 pips of profit. I think it's still in uptrend, but you should protect your trade because you see the price is not going anywhere at this point. But I think it might go again to the long side. Next question is about oil. Okay. Definitely uptrend here. Oil price V-shaped reversal. This is strong V-shaped reversal. Cap with handle here bullish. This is very bullish. So I think you see if the price keeps rejecting from this order block, it could go to weekly L5. If it goes down, then you need to buy the dip. Buying into dip could be good around this zone here, definitely. This zone can provide a good buying opportunity, okay? So watch for this. Good buying opportunities here. But at this point, it's bullish, and if it still keeps going and making another high, it should reach weekly H5. Do I have to use MT4 with ECN account? You can use MT4 with ECN. I use ECN with MT4. But you don't have to use ECN account. You can also use standard account. If you don't trade, for example, if you want to trade something else than Forex market, then you apply for standard account. If you trade only currencies, then you go with ECN. Martin is saying he was working in stock market. Yes, of course. And Bill Wolf originally applied bull waves to stock market. For Forex market, I think you need to use rules that I have developed also. Eric, any news on new Camarilla indicator? Eric, it's still being adjusted, but I will send you the info as soon as it's out. I think it will be final in some 7 days. Yeah, in some 7 days, it should be finalized. But it will be, of course, posted also on website, so wait for that. KP Doran, do you have a video on using Camarilla? At this point, I have the old video, but I'm thinking about making another video. I will make a webinar with Admiral again. I will actually use modern knowledge and latest updates on Camarilla for that webinar, so stay tuned. Rohan is asking, can we talk about gold? Yes, gold. Well, guys, if you remember, I told you it could be bullish, and it was bullish indeed. So here you can see it's still being supported above this bullish pattern here, V-shaped reversal. Then another form of V-shaped reversal, but this is the perfect example of V-shaped reversal. Pull it to the upside, price went up. It was rejected from this spot here, not just a coincidence. So about gold, uptrend, possible buying into dip around this level, 1226.80. And if the price closes above ATR projection high in upcoming days, it could be even, and it could even go higher. Yes, David is saying, tell them about the awesome trade calculator on Admiral Markets website. Yes, you have also the calculator on Admiral Markets website. Here, guys, if you go to Admiral Markets main website.com, you can go to trading calculator, and here use this. This is an excellent tool for all of you who are not sure about the leverage, about the currency, about pip value, lot size, open, close, buy, sell, whatever. This is everything you need to know is here. So use this trading calculator tool. I personally know how I trade my account, so or my bigger accounts. So I don't need any tool. But for all of you who still have some problems with going with the right money management, I advise you to use trading calculator tool on Admiral Markets website. And you know, guys, one of the reasons why Admiral engaged me to work with them is not just because I trade with Admiral, because, guys, I am a trader. And Admiral Markets simply, they are listening to traders. They're listening to you. They always ask me, Nenad, what do you think about this and that? What do you think we should put into next update of Supreme Edition? And my job as a trader is also to try to give you the best possible tools to trade with. And that is what I also like with Admiral, because they listen what I have to say. So at this point, for all of you who are new here, another great tool, trading calculator. Okay, do you have any more questions? Dan, Euro GBP, yes, Euro GBP. I will open the chart again. Euro GBP heavily dependent on both crosses. At this point, it's at resistance, so it might start to have some pullback. This is, you see, it's H3 resistance, weekly resistance, ATR top, double top. It probably will retrace again. If it does not retrace any close above weekly L3, will probably spike up the price towards daily, but it's only 10 pips. So what I would say is, if the price closes with a 4-hour close above daily H4, 85.15, look for longs towards daily H5. For buying into dip, watch for, well, I can say watch for this zone, but I'm not sure. Maybe if it really wants to break out, it could come to 84, 87, 85, and then spike to the upside. So that is what I suggest you to look out for. Okay, and one more question, guys, and well, then we can call it a day. Silver. I'm not particularly into silver market, but simply judging from price perspective, this is huge downtrend. Even on 4-hour time frame, it's huge. But what happens in a huge downtrend? Price usually gets to 23.6 and rejects. So if it closes again below 23.6, that is 1665 on 4-hour time frame, probably the price will continue its movement towards previous low. It might stop in its track if it wants to proceed higher with the retracement, but initially it should retrace, giving you possible short setup on silver. So yes, then if it's David, if it's what you're looking for, try to watch any 4-hour close below. It could be a continuation of the sell, but maybe it will stop short here and then reverse to the upside, going for 38.2. If the price does not close below 23.6 on 4-hour time frame, then it might come to 38.2, and I think it will be rejected to try to test this mini left shoulder. Usually when you see pattern like this, it's not like head and shoulders, classic head and shoulders. But what I have seen so far is when price makes something like mini shoulder, it tends to make it in the now moment. So it could come to 38.2, rejecting towards 1678. For all indicators, guys, if you want to have indicators, this is I have a Camarilla indicator. This is EMA 89, a customized MACD, and I also use blue, yellow boxes. It's elite currency box indicator. If you want to have them, email me and I will send it for free. Of course. Thank you guys for listening. Leon, thanks for your comments. We are calling it a day now. Trade safe, guys. Don't over risk. Be careful around Theresa May's speech. And let's make pips this week again. Cheers, guys. And talk to you soon. Bye for now.